am I going to be able to compete with an insider, somebody who knows the sector, knows all the players? No. So what does that really eliminates for me greenfield exploration, and it eliminates trying to trade into hot stocks and try to outrun everybody. So what that leaves me is, and where I feel like my advantage is understanding where something is distressed for temporary reasons and where it's permanently impaired. And so that's a problem that I can figure out, because it's a math problem, but it's also an investigation problem, and it allows me to use skills that I have.
Hi, all. This is Andy. I'm with Sultan Ameerali here with ConsolidatedRock.com. How you doing, Sultan?
I'm doing great, Andy. Thanks for having me.
My pleasure. Just real quick, right off the bat, just tell me, why did you get into this? And I'm familiar with some of your bio and your background, but why specifically are you interested in natural resource stocks, specifically the smaller caps and the junior mining companies?
Yeah, it's I think for me it was more about opportunity, and I tend to be more of a bottom up person, but ultimately it does make sense to look at specific sectors. And when I started looking at mining stocks, it would have been 2017, 2018. And I think we can all agree there was probably significant value in the market at that time.
That's a good time to get in. Yeah.
Absolutely. Right. And doesn't mean that I did well at first. I've obviously made a lot of mistakes along the way.
Right.
And it took me a while to find my feet. But once I did, taking my previous investing experience and kind of overlaying that on the opportunity that I thought was there, it's worked out well. And so that kind of, in a nutshell, is where I come to mining stocks and junior mining stocks in particular. But as I'm sure we'll talk about, junior mining stocks aren't, they're not the solution to every problem when it comes to supply, demand, and that sort of thing in the market. And I think one of the things that I hope we get to talk about today is the idea of expressing your view profitably.
Right. Well, let's
have
talk about that. Let's go right to that, because let me give you a little bit of background about myself. And this is why I find your point of view interesting and also refreshing. Is I think I'm going to air quote here, I'm the norm when I start with the macro, and I will be, let's say, bullish on a sector. And my background is I was a commodities futures broker, and I ran a small hedge fund several years ago. So that's pretty much, I guess, in that industry is that's how you start. And what I've made the mistake is just like, hey, I'll just buy a bunch of companies and this is a bull market. Something's got to go up type of thing, which that has happened, but I've had a lot of failure in that. So work that out for me, if you would, in your own experience. Again, your journey, is that how you started and then you dialed it down into a micro level or a company level, or just dial that down in for me?
I found that I really kind of hit my stride, and the returns came when I started looking micro. And because it's so easy to just be like, oh, this commodity is doing great. And people who tend to invest in junior mining stocks, I think, have a little bit of an appetite for risk, right? I think, if we're being honest, right? You're either in it or you're not. And so the way I tend to look at it is any commodity, copper, uranium, whatever, where do I kind of think it's going to go? Because that's going to give you a baseline when you build your model. You have to have some assumptions that are going to go into that. And at that point, what I'll do is I'll drill down on what's the best way to express that view. And this as a person who's worked in the commodities industry. You can buy futures contracts. You can buy an ETF that's going to track the raw commodity, and sometimes it'll, some sort of GLD equivalent that's going to just store the rock somewhere. You can buy the industry leader. That's generally going to perform well, but maybe it's not going to give you the returns. And as you go down that risk scale, or go down that, I'm going to call quality scale for lack of a better term, but or market cap, all the way down to your explorer or greenfield. Obviously you can make life-changing returns there, but the risk, yeah, you are rolling. Yeah, you're absolutely rolling the dice, and I think people need to understand that. The thing that I realized early on was when I was learning about mining and commodities, I subscribed to everything I could get. And that includes newsletters, trade magazines, anything I could get. And what I realized is 95% of it, at least on the newsletter side, was crap. And, a lot of hype. I was the product. You're probably, I don't know if you're old enough to remember this, but I am. Do you remember the old sports betting lines where they would tell you to call in for the free pick and get half the people one pick and half the people the other?
Right.
Half of one were like, oh man, that guy's really good, I'm going to call in next week. Right. And, I feel like a lot of those newsletters are running the same kind of model in their own ways. They're taking payments. They definitely have an agenda. I think there's a lot of people who need to understand that, just because the information is free, doesn't, you have to, the information is free. You have to figure out what to do with that information and how to apply it in a way that's going to be profitable. And, it doesn't necessarily mean buying junior miners, right? Like, and I think a lot of people kind of got sold on a fallacy of, commodity X is going to boom. If I buy junior miner, it's going to, and I don't think it works.
I'll make 20, 30 to 1, 40 to 1, whatever.
Yeah. And I mean, and that is a strategy that can work, but I think then if you're going to do that 20 to 30 to 1, you probably have to place bets on 20 to 30 stocks. And even then there's no guarantees, right?
Right.
And, when we're talking about certain commodities, there's you can buy the processors, you can buy the servicers, you can buy, if we're, talking about, things like iron ore or uranium, you can buy, the people a little bit further up the value chain. So, processors or, a steel mill or something like that. There are multiple ways to express a view on a commodity. And
right.
I just feel like there's a lot of retail that are, I think, being sold a bill of goods. And since I've gotten some level of renown in the sector now, I get a lot of Twitter DMs and to be honest, I'm a little bit concerned about some of the stocks that get pitched to me, right? And they're from people who I don't think know any better. And I think it's important to, for people like you and I to let people know that there's,
I'm really glad you're saying that. And it's, I guess, probably the biggest pitfall, or I don't want to say it like that. I guess the biggest challenge is the retail investor that wants exposure into this, and they say they're okay with the risk. Okay. But they don't know where to start. And so they will listen to somebody. Oh, ABC person, I've heard them before, and they're pitching some stock and they sound really nice and they know their stuff. And so they're going to buy that stock, or they'll just start following them or whatever. And so how did you, I guess, what were your challenges? You don't really have to go into too much detail, but how did you come out of that? And you mentioned in previous interviews, getting an edge, in which being in this background, and I so believe that you need to figure out where your edge is and where your competitive advantage is. And so how did you discover that?
So I come from a journalism background. I decided early on, and you can talk to people who know, and you can see that they know what they're talking about, right? So am I going to be able to compete with a geologist, like a trained geologist? Am I going to? Absolutely not. Right?
Neither am I.
Yeah. Am I going to be able to compete with an insider, somebody who knows the sector, knows all the players? No. So what does that really eliminates for me greenfield exploration, and it eliminates trying to trade into hot stocks and try to outrun everybody. So what that leaves me is, and where I feel like my advantage is understanding where something is distressed for temporary reasons and where it's permanently impaired. And so that's a problem that I can figure out because it's a math problem, but it's also an investigation problem, and it allows me to use skills that I have. Ultimately, everybody can learn how to build a model. Everybody can read filings. That's kind of the bare minimum, but you'd be surprised how many people don't do it, but it is the bare minimum. So where am I going to be able to compete and win? Ultimately, I'm also a retail investor as well. Having the patience to hold on, to understand that something may be temporary and not permanent. Being able to wait and having the ability to say no for any reason I want to. I can say no to an investment because it's cloudy outside. I can say no for any reason. But when I say yes, I better be goddamn sure, right, that I know what I'm talking about. And the bigger the swing, the more research you have to do. And because you have to, it's commodities, right? These things drop 50% for no reason at all.
Right.
And the less liquid they are, the more likely they are to drop like that. So you better be sure. And you can't buy your whole position in one go. For the most part, you can't do that if you're getting further down the market cap chain. But you have to know enough that when something drops, you know who to call to figure out if it's real news or if it's fake news. I know that's a loaded term now, but fake news.
Right.
And
no, but really, yeah.
Yeah, or if it's dropping for no reason at all. And these things always have warts on them. And one of the things that
that's why they're junior.
Yeah, exactly. Right. They're not going to be perfect. And you have to decide, is it something that you can overcome? And for me, for the most part, as long as I can trust the management team and, because I want to trust the people that I'm putting my money with. Right. And so even talking to people at Beaver Creek this week, you can tell the CEOs who are used to getting tough questions, who have a real project, and those that don't.
Right.
And I use things like Beaver Creek to get some reps in and practice talking, because even at this stage, I feel like I could use the practice. That's the start of my investigation, and it's not the end. And and so hopefully that makes sense, but I think that's where my edge is. It's due diligence and being able to come up with a thesis that will be able to withstand some intellectual rigor, because when this thing drops 50%, I have to know that I can step in and buy versus I have to get out. And there have been times where I've been wrong, and it is, I know it's a cliche, but it is very much like poker, right? Like you have to know when to fold and you have to know when you're going to put your chips down. And I think understanding what part of the having an outlook on a commodity is not enough.
Yeah. I guess what probably the biggest takeaway I'm getting is a lot of self-awareness and what your strengths are and your background. And your background being an investigative journalist is you're good at digging, if you would, and digging through public data that's available to anybody. And I think, and I learned that early in my career, and I say that lightly because I still learning. But early in my career is what exactly is my personality and what am I good at to give me a competitive edge? Because I have some friends that, they'll sit in front of a computer screen and they'll trade a chart and they're really good at it. And some of them will trade a chart and they're terrible at it, but they keep on doing it. But others will say, hey, I want risk. Risk doesn't bother me. And then the first sign of, a 10% or 20% job, they are flipping out. And others, there's like, they see that as an opportunity. So it's really, I think, I can't stress enough, is self-awareness and then just simply doing the work. There's no free ride in this, if you would. In fact, a lot of people want to take your money.
Yeah.
So,
and this sector more than a lot of others, it can be a zero-sum game if you're not careful, right?
Yeah.
And,
from experience too.
Yeah. And it really is a matter of, why are you getting this bargain, right? And,
Right.
if somebody's reaching out to you and says like this thing could moon, why are you getting this bargain? Why are you so special? Right. And
Right.
a lot of times answering that question will, you know, lead you to an answer of, okay, maybe it's better to wait, or go from there. I think another piece that you mentioned that I think is important is we're all always learning, right?
Mhm.
You never stop
Yeah.
learning. And one of the things that I've tried to incorporate, and I do a bad job of it, but is technical analysis in the sense of understanding where to. I don't use it to make buy and sell decisions in terms of investments, but the idea of learning where to add, understanding the charts. So maybe if something's going to drop lower, maybe I can average down at a lower price.
Sure.
Assuming my fundamental thesis is still intact. It's helpful to understand, when taking money off the table, because it is hard to figure out selling. And I think the last thing you want to do is sell your entire position and then watch it keep running.
Right.
So
I still do that.
yeah,
So-
it's something. So it is something I'm trying to incorporate because I want to, as I get older, what I'm realizing is timing the bottom is hard, but if I can, and nobody's going to get the absolute bottom and nobody's going to get the absolute top. But I have a friend who calls it that 60% in the middle. If you can avoid the 20% at the bottom, and you're not going to get the 20% at the top. If
Right.
you could get the bulk of that move, then, on the whole, you're doing pretty well. And you need to be able to do that because your winners absolutely have to subsidize your losers, and
Yeah.
there are losers,
And there's going to be a lot of losers.
Yeah.
So, but if as long as you hit some home runs, and that's why, in my mind, why you're playing junior stocks is you're going for some big home runs here.
yeah.
And not only home runs, some grand slams, and then that subsidizes, if you would, some I don't want to say bad decisions, but just some stuff that didn't work out.
Yeah, absolutely.
Yeah. Well, talk to me a little bit more again. So work this out a little bit. Knowing your methodology is like, what are you looking for when you start peeking under the hood of a mining stock or an energy stock or just a junior company?
I personally want to see, uh, uh, I think the way I would put it is, assets that I'm buying at less than what they're trading at. And I know everybody says that. So there is to me an art, to it.
Let me interrupt you. You sound very Warren Buffett-ish.
Yeah, I don't, and I'm trying, and that is also one of my pet peeves. People who quote Warren Buffett and then don't actually follow anything that he says. But, and
I say
so,
that as a compliment, a high compliment.
and so when I started doing this, I think the first mining stocks I started buying on my own without, looking at anything or whatever, were prospect generators. And they were easy to kind of figure out because, you find a good prospect generator trading under the cash value, cash shares, the presumed value of the royalties, with a good team that's not burning money. Then that's a pretty easy bet to make, assuming that you understand that they could keep drilling and get a bunch of dusters, right? But it's a logical bet to make. What I eventually moved on to are assets that are distressed in another way, and that's usually some sort of temporary impairment. And so I'll give you an example.
Like a change of management, or go ahead.
Yeah, change of management is a really good one because, as you know, you get the kitchen sink quarter, and the kitchen sink quarter it sinks a little bit more, and like if you have a view on it, like that's a good time to load up, right? And so, Antero Resources was one I've talked about publicly, and that was a dry natural gas producer in the United States, and in a very bad natural gas market. But if you looked at it, they had hedged it out. The people running it were significant owners of the company, and they were buying back debt below par in the open market. And so, looking at that, you could make a few assumptions that they understood the risks of a commodity business and they had hedged it out, even though there was a lot of debt. And that was the other reason why it was trading much lower. These people had a reasonable view that they could get to the other side.
Right.
And,
they saw a lot of value, obviously.
Yeah, they saw a lot of value, and they were, making very accretive transactions of their own, instead of their own stock, it was their own debt, right? And so paying it back in a very interesting way, I thought. Um, Now that there's a lot that could have gone wrong. So that position was sized appropriately. And it was something that I monitored. And as it became clear that they were going to make it to the other side, I would add to the position. And it just happened to work out that as I was adding to the position, the stock was dropping. And so a confluence of events kind of came together. And then when natural gas kind of turned and went a little bit higher, it was easier to see, okay, stock is going from $2 to $4. And I think it's worth significantly more. I'm gonna add some call options. I'm gonna get dangerous now and and do that. And so then eventually that stock went into the 30s. I sold most of my position in the high 20s and then let the call options ride. But that's an example in my mind of temporary distress. And
so let me ask you, because this is a great point. Let me ask you, when the stock was dropping and you saw that they were going to make it to the other side, or you became very confident they were going to make it to the other side, did you get more concerned, or did you see that as an opportunity and get even more greedy? Because obviously you were adding, but I mean, how was that emotionally for you?
Yeah, it kind of depends on the day, doesn't it? So I'd love to tell you that I was like a stone cold killer, but controlling emotions for me is hard, right? And the best way to look at it was I'm going to buy it, I'm going to go about my day. I'm not going to stare at it. And what I'm definitely not going to do is open up Twitter or Seeking Alpha and read some sort of half-baked analysis, because part of what I do is similar to somebody who's buying Apple, who's doing channel checks or something like that. I ask people, I do try to talk to people on the ground. And I think that's another differentiating factor and I understand not everybody can do this, but I go out of my way, and it's become easier with social media, like with things like LinkedIn or whatever, to talk to mid-level employee. The mid-level employee is the gift that keeps on giving, right? And if you can
That's
find
great advice.
who's willing to talk, people who are working the service industry, who are there, I think the most bullish signal that you can get on any company is that they're adding staff, or they're having trouble adding staff to keep up with demand. How is that a bearish signal in any way, shape, or
It's not. Yeah.
And so those are things that you can only find out if you're kind of like pounding the pavement to kind of look for that information, right? It's not going to be freely available. And so when somebody comes and waves a discounted cash flow in your face, and you're like, okay, well, it's free country, but I'm going to disagree. Another one that did really well for me, and I'm going to preface this with like a lot of this stuff I bought in 2018 to 2020, right? And so, I don't know if these kinds of gains are replicable in this with using the same model, but I think the model still works. Are you familiar all with Paladin Energy? It's it's a uranium miner in Namibia. At least it was a uranium miner in Namibia. They own something called the Langer Heinrich mine. It was put on care and maintenance after uranium crashed in the last cycle. And it was trading at around 8 cents Australian on the ASX. And that's where I started buying. I bought between 8 and 12 cents. And, and this was during the first phase of the, uranium's going to moon. And people started coming out and talking about it in 2018 and 2019. What I saw was a company in my mind with a very simple value proposition, right? If uranium goes up, putting aside the quality of the ore and all that kind of thing, they can restart relatively quickly. They've got all the infrastructure there. They sold 25% of the mine to a Chinese state-owned company. And so they had some obviously there was a validation that there was uranium in the ground.
There's something there. Yeah.
And that it could be restarted relatively quickly. And in my mind, that was kind of where I wanted to be. If the price of uranium had spiked and there was a shortage, I wanted to be somewhere where somebody could be up and running in within 18 months and, front run that position. And then when everybody else figured it out, piled in, I would be able to sell out before they either had to announce a single production delay or somebody's, the large tires on their big machine got stolen or something like that, and the stock kind of cratered. And that was the kind of the way I looked at that. And so I ended up selling that stock between 64 and 80 cents Australian.
Well done.
I think now it's trading at 91 because obviously we're back into kind of a uranium mania.
Right.
And so that's kind of my sweet spot. That's where I'm kind of looking for value, something that's in distress, but it's tangible. I'm not relying on drill results. I'm not relying on, I know a lot of junior companies, it's M&A is the way you have a liquidity event, but you don't necessarily want to rely on that. Like and so I'm looking for things where there's multiple ways to win. And there's some tangible assets there that aren't being valued by the market for whatever reason. And ideally, these are real deposits run by real people. I don't do, if I hear the word optionality or anything along those lines, like that's not for me. It's not where I want to be.
Got it. Well, let's talk about that. Somewhat of a segue in the sense of it, like any market, but especially with commodities and natural resources, you have a boom and bust cycle, if you would. I would say overall, we're somewhat still in. We're not booming. And the reason why I'm in here is just because I see a lot of distress. But I guess I would say is, what's your opinion though on riding a bull market, if you would, because it seems like the more hype, like for example, let's take gold, for example, is like, we've been hearing the gold thesis now, or I've heard that my entire life. Yeah. And gold will have a run, but it'll happen very quickly and it'll last maybe 18 months, maybe a few years. And then we'll be going sideways down for several years. And I guess my question is, have you found doing the reverse psychology, meaning you want to be afraid when people are jumping in, as you said with this uranium play that you did, or do you want to be greedy? And again, this is stealing from Warren Buffett, when you see a lot of fear and a lot of blood. Just tell me about that cycle, if you would, or walk me through your thoughts on that cycle.
So I'm the guy who sells too early, at least so far anyway. I owned coal companies and I made good money on them, but if I'd kept them, I might be even better off. I've been lightening up on oil, and oil just crossed $90 or something like that.
I'm still up into my eyeballs in oil, but yes.
Yeah.
I get it. Because I'm actually thinking today, man, I've had a good run. So
because part of what I like to do is I want leverage on the commodity, right? And I think you would understand this as well. And I would go back to, how am I going to express that bullish view on the commodity? Because oil's an interesting one, right? Like, you can buy a large cap oil company, you can buy a small cap oil company, you can buy an oil royalty trust. In their own ways, they're going to track the price of the commodity. So how are you best going to outperform the commodity? Because otherwise you can just buy USO
futures contracts. Yeah,
you can, retail. You can buy USO. You can buy options on USO. You can buy futures contracts. So how are you going to outperform the underlying commodity without taking on an extra risk, right? And essentially, what we're talking about is leverage on.
Yes.
For me, I like to do that by mining for value on the balance sheet. So I'm looking for, in an ideal state, something that's got a little bit of leverage on it, but with the commodity price about to turn, generating enough free cash flow that you got a ton of debt over here, a little bit of equity value over here. As you pay down the debt, the equity value goes up,
right?
Multiple goes up. You can do some very interesting things. And so I sold Meg Energy, which is an oil sands producer. I bought it between $6 and $9. I sold it at 24.
Nice.
Off the table. A three bagger. That wasn't all because of the commodity price. It was because they were deleveraging their balance sheet. And I think now they've basically said, once they are fully delevered, they're going to start buying back shares and maybe paying a dividend, but there's seem intent on buying back shares. So that's a way to do it. Another way to do it is, something else that I own that's kept going is Petrobras. And I know that's a Twitter favorite, right? Trading at 3 times earnings. It's pretty, the thesis is pretty self-evident. Um, uh, and it was geopolitical risk that kept that down. And I think that's kind of gone away and the oil price has gone up. You've seen that move. I think to answer your question about getting out, I think it's about how you want to express that view. And, so using oil as an example, for me, it was some Canadian oil stocks that were in distress in terms of debt on the balance sheet. Another one I owned was Baytex Energy. I bought between 40 cents and $2. And when they made an acquisition in the United States using shares, even though they hadn't fully delevered yet, that was for me is like, okay, well, you've got enough oil,
Right.
Clearwater. Why are you making this acquisition? And quite frankly, I don't even want to know the answer. I'm
out. Yeah. Yeah.
And this is where I think some people in the oil mafia are going to tell me I'm stupid and oil's going to $200. But I just look at this like, maybe I'm the stupid one, right? But oil at $200 implies a lot about the world.
Yeah.
That
it's probably a lot of places you don't want to be in stocks.
Yeah. It's just that idea that oil stocks are going to defy gravity and the rest of the market's going to go down. I don't buy
that. Yeah.
Yeah. The markets are liquidity devices.
Mm-hmm.
And I worked at BNN long enough to know there's no sectors that just defy gravity because you think they should. We're already seeing it now, even in the United States. If you look at like heavy manufacturing, diesel is an input, and the price of diesel's up, right? So what happens if the price of oil goes over $100 and stays there? It's not good for the economy, right?
No, yeah. Interest rates won't be coming down.
Jet fuel, marine fuel, diesel, like
just go down the list. Yeah, things are more expensive.
Right. And so I think to your point, when do I get out? I think it just depends on how I'm expressing that view. And when something's optimally priced and at a certain point it's just going to track the price of the commodity, then that's generally when I'm going to sell. And I think others have a different opinion. They'll wait for a certain price of the commodity. And I personally don't think that's a good idea because you're layering on a level of management risk and management execution onto that. So you have to factor that in when you make a sell. So for me, I'm always going to sell early as opposed to somebody else who's going to ride it a little bit further.
On that, let's go a little more macro because we're talking about oil and oil going over to $100, let alone $200 or whatever. And I would tell you myself, I'm an oil bull. I mean, I had a lot of skin in the game with this. That being said, I really don't know where oil's going to go. I'm just looking at the camp where it's going higher, right?
Yeah.
But that all being said, we still have a relatively free market. So other sources of energy will be coming up online. So let's say, for example, we can talk, what does this mean for the things like uranium? What does this mean for like solar or different alternative fuel sources? Talk to me a little bit about that. What's your macro view on energy and specifically alternative energy and uranium and that sort of thing?
I don't have a strong viewpoint on alternative energy. The way I look at it is you build a solar plant, you build a wind plant, your profit or loss is going to be very dependent on how your PPA, your power purchase agreement is structured with the local utility.
Mm-hmm.
I live in Ontario, Canada. Power purchase agreements here. This was a conservative government that came in, a right-leaning government. First thing they did was tear up those contracts, right? For feed-in tariffs and things like that. So, I don't personally invest in renewable power generators. I own something called Altius Minerals. They spun out something called Altius Renewable Royalties, and it's I hate it. Like I just don't. The idea of a royalty on a renewable power source, you're really just sort of betting on the equipment kind of lasting, right? And so,
it's back to the commodity. You're basically betting on the commodity and the equipment.
Yeah. So I think there are other ways to express that view in terms, because what we're talking about ultimately with whether it's renewable energy or natural gas or whatever. Like those are just the inputs. And the what are we looking at on the other end? We're talking about electricity, right?
Right.
And I think the more important thing to look at is probably something like the Inflation Reduction Act and the U.S. infrastructure build out and reshoring of manufacturing, both in Mexico and in the United States. And that's a trend I absolutely want to play, because I don't think that's going to reverse. And ultimately, whether it's powered by solar panels, wind turbines, nuclear facility, natural gas, or coal, you need electricity, and you need to build out manufacturing infrastructure for the United States and Mexico. And so how do I want to express that view? Not necessarily in the power producer, i.e. the renewable space. I own something called SNC Lavalin. It's one of my larger positions. Again, turnaround play. It's a big engineering and construction firm based out of Canada. I don't know how familiar you are with Canadian politics, but they were embroiled in years of scandals related to Justin Trudeau and bribery and Muammar Gaddafi. It's a long,
Sounds like U.S. politics.
yeah. And they also tended to lose money on what they called lump sum turnkey projects, where they got a lump sum and they were told to build a piece of infrastructure. And you can imagine how that went with 2020 and whatnot. So these massive cost overruns. So they're out of any business that would involve bribery or a lump sum turnkey. And what they are into is nuclear services, which is a huge business for them. So they refurbish nuclear reactors. They help build nuclear reactors. They own the rights to something called CANDU, which is a Canadian, a way of building a nuclear reactor. That's they own the rights, the servicing rights to, and whatnot. They also have an engineering services business. Is very high margin that they can't. We were talking earlier about hiring employees. They've hired 2,000 engineers, not just random people off the street, but engineers this year to keep up with demand for contracts in the United States. And so, not necessarily a commodity play per se, but I think a very, very profitable way to do it. And the company's actually changing its name to get away from its very scandal-ridden past. And they've made no bones about the fact that they are upskilling people into nuclear engineers because they can't find them on the open. They can't. There's more demand for their services on the nuclear side than they can keep up with. And so that is absolutely a place that I want to be to express my view on the nuclear fuel cycle, as opposed to buying uranium juniors. And then something else that I own is called Centrus Energy, and they are a refiner. Obviously uranium, you pull it out of the ground, you can't do anything with it, right? You have to refine it in a mill. It becomes UF6, and then that goes into centrifuge. And essentially what Centrus does is they run the centrifuges, and they have their own version of that. And so that's where I want to be. When we talk about renewables and that sort of thing, I want to be on that sort of value add side, because I think ultimately it's a bit more resilient.
Yeah, I'm glad you brought that up, because it reminds me of two things. Number one, I'm sure you've heard it, like the mining for gold in the 1840s and 1850s. Everybody ran out there, and who got rich was the people selling the shovels and that certain thing, as opposed to the actual miners.
Yeah.
So I think that's a great way to play. And I would say it might not be a true commodity play, but I'd say it's a very smart and wise way to play. The second thing is, it reminds me a lot of, because I own some royalty companies.
Yeah.
What are your thoughts on royalty companies? What are your thoughts on that?
Love royalty companies. Absolutely. Royalty companies.
So do
right?
I. It's very low risk, and you have exposure to whatever you're betting on.
And absolutely, we haven't talked about it much thus far, but that way of expressing a view on a commodity, right? A royalty company, I think for the retail investor, is the way to go, because
I do too.
There's so much less risk there, and
ultimately leverage, not as much leverage. You still have leverage.
Yeah, and it's I look at royalty, the management of royalty companies like a hedge fund manager, right? Because it's ultimately a capital allocation exercise, right? You're either buying the royalty or you're drilling something out in order to generate a royalty.
Right.
And is that person trustworthy? Are they going to steal your money? And can they allocate capital correctly, right? And the good thing with a royalty company, if it's been around for a while, you just have to go and look at the chart. The chart tells the story every single time. If they Franco-Nevada, are they good capital allocators? Well, look at that chart.
Yeah.
Uh,
So I'll tell you a story about it. It was 1995 when I was just getting in, and I just heard about them, and I never bought them. That I'd never made that mistake again. But I
yeah,
mean, I just never bought them. And so that what got me really interested in royalty companies. And that was just as a young kid starting out. It just wasn't sexy to me.
right.
And, and now I'm pushing 50 years old. Man, it's sexy to me.
Yeah.
So tell me about, let's talk a little bit more on macro, just more of the metals maybe, and maybe some agriculturals. What are your thoughts on, what do you think of, what's your outlook on the metals and agriculture?
Yeah. So I would say for something like gold or precious metals, I'm not a bull. I'm not a bear. It's just, it's what you said earlier. I think people who use gold to preserve purchasing power, that makes perfect sense. Gold going to $5,000, $10,000. You're coming up with a view of the world when gold's going to $5,000 or $10,000. That where I don't necessarily like where the world would be if said $5,000 or 10,000.
Sure.
And also gold, it doesn't get consumed, right? And this is my problem with silver bulls. It doesn't get consumed. So I simply am not a person like silver squeeze or silver is going to $50. To me, silver's an industrial metal. Most of the silver is generated through streaming silver wheaten or, wheaten precious. They're, they sell no matter what because they have their margin is contracted, and they have no reason to hold it off the market or shut down a silver mine because it's mostly byproduct. So precious metals, I'm not against them, and I do own gold companies, but it's not. I'm not a bull in any way, shape, or form. I do like copper because of this infrastructure sort of build out story, and copper has so many uses. Even if electric cars don't take off, then it's got to go into the wiring that goes into heavy
or plumbing or whatever have you. Yeah,
absolutely right. And so to me, copper is this sort of super metal that's kind of used for everything, right? And I absolutely want exposure to that. Oil, I'm not, I wouldn't say I'm a bear. I actually think people who own oil will do okay. I'm just not a $200 oil person, right? Same thing with uranium. I think people who own uranium will probably do okay, but I think I wouldn't call it concern, but what I'm seeing from people who reach out to me, and maybe you find the same thing, is there's this impression that it's going to be higher for longer at $200, and that's just not the world. That it implies that there's going to be no demand response when a commodity gets that high, especially one like oil, where we can all fundamentally disagree on how much oil is around or who's going to whatever. But I guarantee if oil at $200, people are going to drill for it. Right?
Yeah. Well, it goes back to if it is $200. I mean, they're going to be putting up a lot of windmills or whatever. I mean, people are going to buy electric cars. And again, I don't know. I'm agnostic, if you would, on the final price, and I almost find it not helpful and almost silly to start predicting like where's this going type thing. Yeah. All I know is we need it, and and I'm looking at just the short term capacity and just where we're at in storage, and we're low, and we're not bringing on new fields right now. So I'm a bull.
Yeah, and I think and I think ultimately the people who will do okay, well with oil, I think, are people who have your kind of outlook where they kind of look at it as this is a long-term hold. You treat it like a cigarette company, where you're going to do okay in the long run if you just kind of buy it and ignore it. And I just don't think with oil, you have to take on a lot of risk. Why take on some junior oil company or somebody who's out there drilling for oil? You can buy CNQ, Canadian Natural Resources, and call it a day, right?
Yeah.
6%. They buy back shares. They've got enough oil in their reserves there to last 60 years or something like that, right?
Right.
Something like that. You could just buy it, set it, and forget it, right?
Yeah.
We were talking about royalties. Some of those royalty companies, if you pick your cards up, I never owned Texas Pacific land. I kind of wish I did, but
right.
that's in the US. Freehold royalty is something I bought in 2020. I don't intend to ever sell it because, the cash on cash return from a distressed royalty in 2020, based on my cost, it's probably about 20%. It's about 7 or 8% now. And why would I, to your point, I think oil will do okay. I don't think it's going to zero. I don't think it's going away. Um, I would just caution people against, $200 oil is going to be here and it's going to, you're just talking about blind faith at that point. That's not based on anything. It just ignores the way the world's worked for hundreds of years.
Right.
Supply and demand response, right? So
sure. I guess I just see it as just really hard to lose, and I want to be in something that's hard to lose.
Yeah.
Last, do you have any thoughts on agriculture? Again, and God forbid things continue to get dragged out in this war that we have with Ukraine and Russia. But I am also a realist. I mean, that's disruptive over there. I have family in Eastern Europe. Do you have any thoughts on like how that's disrupting the global supply chain? And I know that Ukraine is a huge, or I believe Ukraine was a huge potash producer, and that's essential for crops. For those people that don't know what potash is, it's a fertilizer. It's used in fertilizer. So what are your thoughts on if you have any thoughts on agriculture?
So Ukraine is a large producer, at least it was anyway, a large producer of grain. I think you're referring to Belarus, which is was a large producer of potash, and obviously they're under sanction. It's something I've struggled with because I want to be long without using futures contracts. So I don't necessarily want to speculate in soft commodities like grain or wheat or anything like that. It's I'm just not skilled enough to operate in the futures market. So where I've decided to try and make some money is probably in fertilizer.
Right.
And
I'd agree.
Urea, nitrogen-based, ammonia-based fertilizer is interesting to me. I own something called CVR Partners, which is an MLP in the US, and it's not for. And I'm going to preface this with this is not for everybody because there's tax implications to owning an MLP. I'm a Canadian who files a US return, so I can totally own that without it being a problem. But so with that caveat aside, that's something I own because I like the idea of getting paid to wait.
Right.
And price does take off, then as MLPs are wont to do, you get these sort of large distributions.
Yeah.
And you also get the kicker of Carl Icahn has indirect control. So he's a person who tends to sell when it's time to sell. And you can make an argument that those assets are probably worth $120 to the right person. Now that obviously is going to vary. The price is going to vary in a sale depending on natural gas contracts and, natural gas being an input into certain types of fertilizer. So that's something I own. I'm looking into things like CF and Nutrien, but ideally I'd like a little bit more torque than just buying the largest player in the space. But again, taking this back to our original discussion about junior miners, I don't necessarily want to go with something that's a junior that's drilling in the ground. I'd like to find something where there's a bit of torque to the price, and fertilizer in its own way can be a regional market. CVR is obviously based in the Midwestern United States. There's certain markets that they can cater to. Where the Ukraine stuff is interesting, and I've gotten a lot of this information from. There's a geopolitical strategist named Peter Zion. People either love him or hate him.
I'm familiar.
Yeah, a lot of people hate him. Whatever. I find that he doesn't have to be precisely right. He just has to be directionally correct, right? And if you can take that information,
I'm a fan. Yeah, I'm a fan.
Absolutely. So am I, and I find his information useful as a starting point. And,
so do I.
One of the things that he will freely admit that he got wrong is that he was expecting a famine because of Ukraine being kind of out of the market, growing grain, and that a lot of that grain goes to the Middle East. Now, last year there was some sort of grain deal, and this year there's not. And Russia is going out of its way to destroy a lot of infrastructure in Ukraine.
Right.
So, his thesis is that even if the war were to end tomorrow, their capacity to grow food. They've
Right.
been impaired for a long time. They've basically been taken out of the market. And looking at the knock-on effects of that, it suggests that there might be food shortages in certain places, particularly in the Middle East or China, or it's going to drive up the price of food because people who can afford it are going to pay for it, and other people are going to suffer. To me, that means there's an opportunity to increase crop yields to make it profitable for farmers. And so I haven't quite figured it out yet, but
That's the direction.
yeah, that's kind of the direction I'm leaning, and I have to kind of lean into that and figure out the best way to express that view. Because I think the last thing you want to do is make a mistake, right? And
Yeah.
uh,
Well, I'm
you know,
glad you brought that up because that's kind of what I'm leaning into. And I don't have any skin in the game in that or money on the table that, but I'm interested in that. Real quick, I know we're getting long on time here. Any final thoughts that you have that you can share, or just any words of advice that you can give to anyone?
yeah, there's no free lunch, right? Like,
Right.
you gotta do the work, and I would just caution people to be really careful. Like, there's a lot of uranium mania now, and just think it through logically and be honest with yourself about it. Like, if you're in this to gamble, yeah, you can buy a crappy uranium junior that's drilling something out, but if we're being realistic, they're not going to have anything in production, whether in this cycle or ever, and if you want
Right.
to speculate on that, then just be honest with yourself, right? About what you're doing. If you consider yourself a serious investor and, look at it objectively and just, who's going to be in production, who's actually going to make money out of this, be aware that people are trying to sell you something like, uh, nobody's going to do the work for you. And people in this industry they're not fiduciaries. Right. And so when somebody's selling you a uranium seminar for hundreds of dollars, and then some of the speakers are people that uranium junior mining stocks that the person is invested in, do they have your best interest at heart?
Right.
Right. Or is that
That's great advice.
yeah,
Yeah.
is that a broker trying to help out,
His
stocks that
buddy.
fall to this, yeah, or his buddies, right? If somebody's talking about oil at $200 and they own a service, that talks about oil, you know, look at that objectively, and how are you going to make money, and again, be honest with yourself. Like, uh, it's not, you know, it's not hard to make money in oil stocks. Like, there's a ton of companies producing oil. So why go down the risk curve if you don't have to? And if you're going to go down the risk curve, understand that there's risk to that, and you need to be compensated for that
Yep.
risk, a return that's going to outperform the base case, which is just owning the commodity or owning the biggest player in the sector. And so when I look at Canadian oil stocks, as an example, uh, why do I need to own something that's a mid cap or smaller when I can just own CNQ?
Right.
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 So I'm going to get a 3 to 5x return. The answer is no. Right. And I just don't see that right now. Like, that opportunity is gone. Right. And, and I think it's more what you're talking about, where you can own it for longer on a longer term basis. And so something that's not going to blow the lights out, but you're going to generate a good return over time. And, I think there's a lot of people who just need to be honest with themselves that they're gambling here as opposed to investing, and understand that there's a lot of people out there ready, willing, and able to take their money.
Yeah. No, great advice. Real quick, how can people reach you and how can people find you?
Best way to find me is probably on Twitter, at Sultan Ameerali. That's I try to answer as many DMs as I can. Obviously, if it's just like, what do you think about this stock, or like, why do you hate my stock? Feel free to talk to Andy about that. I know, uh, but I can't help you with that. But yeah, I'm not trying to sell anything to anybody. I actually got on Twitter mostly to validate that maybe I know what the hell I'm talking about. So I don't post all my trades in real time, but I try, um, post like why I try to get information back from people. I want people to tell me I'm wrong, right? Because if they tell me I'm wrong, then maybe I missed something, right? And or I get a better sense of sentiment or something like that. And so I'm always happy to interact with people on Twitter. To me, it's a good sentiment gauge as well. If you put something out there, you learn a lot about people when you criticize their favorite stock, and the response you get back.
Yeah.
I think a lot about certain things. Recently, I've been short certain stocks, and I've had people take shots at me and whatnot. But so far, I'm undefeated. So so yeah,
It's always a good sign.
yeah, I'm not,
Really get.
yeah, I'm not looking to sell anybody anything that, I come from a media background. So at some point, even if I were to put something out there, it would be with, paid ads or, or something like that. But I at this point in my life, I'm not, I'm doing pretty well with the investing thing. I don't really need to put out a paid product or something like that. So.
Well, I appreciate your time. I'll put all of this in the show notes, and just want to thank you so much for this. And I'd love to have you on and again sometime in the future.
Okay, sounds good.
All right. Appreciate it.
All right. Thanks, Andy.